So market projection for next week on GBPUSD. So as you can see, this is the time frame, and I've highlighted some drawings on the chart. So as you can see, for this tool, this is my short bias tool. It's a tool indicating a sell setup. A sell setup that is we are looking to go short, we are looking to sell in the market. So now let me give reason why I am taking on this bias. Okay. So as you can see, this is a Fibonacci retracement. And at this place, we've seen market giving us series of higher highs, higher lows, higher highs, higher lows. That is, we've been having movement as this. Higher high, higher low, higher high, higher low, higher high, higher low, then another higher high, which I would refer to this. Why? Price came all the way to this place at first, actually closed at this place, 1.35634. Then give a short retracement, a short pullback. Then give us a similar short pattern, a similar pattern, that a familiar pattern. I mean to say, give us a familiar pattern that we can refer to as a reversal pattern, a double bottom. But then there's something to take away from this point, which is this candlestick, this green candlestick, it closed, the price closed it beyond this previous high here. I'll zoom in and show it to you anyway. So as I was saying, that's giving us a series of higher highs and higher lows. And over here, that distinction gives us that market has been on what? A bullish movement. It has been on bullish movement, a bullish momentum over time, from let's say the period of from 15th of January, from 15th of January till today, which is the 8th of June. Yeah. Okay, so having that proven over time, we know that market will be looking to go back, like to give us another higher high after giving us a higher low. So now what we're looking for is what? A higher low, which would most likely stop around this area here, around this region. But then there's a way to narrow it down. How can we do that? Yeah, there's an order block. There's another block here. And when I went on to a week time frame, I was able to see that this price needs to be filled. This particular red candle we are seeing here is the other block. Why? It is the different candle in series of bullish candle that is in a momentum that is giving us a bullish candle. We came to see a red candle in it. Why? That is, at that point, there were present of sellers. There were present of people that were looking to act against that current momentum at the market at this place. But then the strength was not enough, which reverse give us what? A liquidity pool, that is, there's potential for market or for price to come react off this level, right? Okay, then let's keep that as that. Now, having said that, we've been able to know that we're expecting markets to come over to this region to give us what? A reversal pattern, then continue its bullish movement, right? So that being said, let me take this off. That being said, now let's see why it would act on it. Good. We've seen that it's on a bullish trend, and at this point, price is looking to give a pullback. Is looking to give a retracement. Now, was what called for our Fib retracement, our Fibonacci retracement, which you can see on the screen. How to read this thing again. Okay. So sorry about that. My subscription just expired. I just found out today actually that my subscription expired. I got mail about that yesterday. Anyway, let's proceed. So that was the reason for our fee retracement. As you can see, this was a swing, this was a swing low, which I called our what? Our higher low. That's the low, that's the previous low, the previous lowest low that we've gotten after a series of lows as this. So this is our swing low. And what market is looking to give us a new swing low after giving us a new higher high. Now, brilliant. This fib retracement is to what? To take out high probable zone that market or price would react off or from. This is why it is calibrated into 50% retracement, 61.8% retracement, 71 retracement, and 79 retracement. Most of the time, 79 retracement has I have strength of pushing the market all at once. But oftentimes we do have 50% retracements too. So in a situation like this, market can look to push up from this area, or this area. But then there's something about this setup, which I call high probable setup. Why? There should be a reason, there should be other confluences that is pushing a market or a price to act the way it does or the way it has potential to do in future, which is why this zone is marked out as our order block, and at the same time it coincides with our 61 to 71 Fibonacci retracement. Now let's just go to lower time frame to see it this 4 hours. Can see this. You can see this exchange price. You can see this inverted hammer here. This hammer. You can see this inverted hammer candle here. But it's it signifies movement to the downside alongside the way market approached this place. And what happened again? Market cleared the liquidity because price closed above this position. Now, these are reasons to push the market to the downside, but for how long? Which is the reason let's close this. So as I was saying, this was a 50% retracement. I was showing on the daily time frame that if markets would to take out this liquidity, then also fill up the space, then tap into this. So at this point, which should most likely be our first TP, our take profit. We can take our profit here, then break even all up to this point. Yes, all up to this point. We can take our profit here, then break even all up to this point. And this is a 1 to 3 RR. This one ratio 3 is to reward. And I would say is a high probable setup. And let's see how markets react from this. I'll be showing gold and let's say BTC. BTC is currently being affected by fundamental a lot. So this for GBPUSD, and I would say, can see. Let's see there. As you can see, this is a trend line strategy as well. Look at it. 1, 2, 3. At the third time, market the trend line has been what? It has been broken and tested. Break and retest. So what? another complaint to our entry for market to what to sell. Market to sell. So let's just hope those who as we just said or projected. Everything draws so big is not that big after all. But then this is a very good catch. We're talking about how many pips should that be in it? There's the main, that's how massive it can be when you do when you do top down analysis. When you do top down analysis, you have high potential pips to take, and oftentimes you tend to swing. You tend to swing. So let's hope markets do up as we projected. And at the same time, you can see it's coming all the way back to, I won't call it the origin, but it's coming all the way down to the neckline of the head and shoulder pattern that pushed the market all of the way to that point. And so narrow it down. There's a pool of liquidity here to be taken out. So these are what our first take profits, our first zone of interest. That's 50% retracement. So as I highlighted from the daily time frame that the Fibonacci retracement went from the higher high to the higher low, which was our swing high and low. And just take a confirmation of this retest here. Market can open later today and drop down or give it some pullback to the upside, then come down. We'll be narrowing that on our lower time frame. So far, just consolidating. This is where Go structures comes in. This is where Go structures comes in. So in order not to get this all complicated, I hope I've been able to explain our insights for this week on GBPUSD. Although this movement will take 2 to 3 days, I also have some major fundamental news that will come up maybe Tuesday, Wednesday, Thursday. So till then, have a nice one. And if you have any question, you have any insight or any contribution, go down into our comment section and put your suggestion, your opinion, your questions right there. If you need any understanding of Forex, there is a link on my bio that is showing my PDF for beginners, intermediaries, and masters. And keep tuned to the channel, as I would always come back to this platform to share more insights on the market for the likes of gold, BTC, USD, and the XY. So this was, let's do a quick recap on our trade for last week. Yes, our trade for last week. As we all know, gold with its volatility, it has been giving us a series of upward movements. And look at this place. After it cleared this liquidity here, at some point, this was a major zone. At some point, this was a major zone. So then, after market liquidated this, all I could expect is a major pullback, which after I did see the impulsive movement, that it should, and it went on to give as long as how many pips, as much as we're talking about 57 pips here just from this movement, and we have to multiply that. We're talking about 100 and something pips. Okay, about 92 pips, all just from this place. How many pips are we expecting from this trade? 273. 273. 273. Can you see that from daily time frame? We want to 3 is to reward. Just look at it. It's a very, very small. It's a small setup, but look at it. Okay, look at it. Let's just look. Let's wait for market. Let it give us what we're looking for. Let it come to us. Let it come to us. Let it come to us. So if there will be any movement at all, let's say something up to this zone for entry. There will be some pullback. That'll be at 1.35460. So you can take this as your POI as a point of entry. $1.35460. Look at it. So let's see. Maybe some pullback to this area. They probably end with a week and market will dump. Why? There's liquidity here to clear. There's market here to balance, probably. Yeah. Certainly, if you should go to the lower time frame, you say that. And since okay, I won't call it A, but then it has given series of lower lows, lower highs to on this time frame. Look at it, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So I look to clear this liquidity, which will further reinforce, its buy moment, its sell momentum. Okay, thank you. That'll be all for today.